Hey there.
Hello, everybody. You are tuned into Normal. My name is Nell.
My name is Lebo. Today we're actually speaking about, is it actually cheaper to develop a property or to buy a property in South Africa?
As a property investor, it's very important that you understand the laws of development and also you understand the laws of property investing. You can find them both under property investing. However, it's very important that you do not find yourself involved in one of these by default, because that's where you can actually do a risk assessment in terms of which one is more linked to your financial and property goals.
Most definitely. Before we actually go into the content, right? Remember, on the 5th of June, we will actually be hosting another property workshop at Midrand.
Looking forward to seeing you. If you haven't reserved your seat, best make sure that you do actually send your email to propertyevents@nongwealth.co.za.
So now, before we actually start going into content in terms of what should actually happen, do you actually develop or do you buy a property? We need to first start looking at your goals. What are your goals? Is your goals to grow your property portfolio, or are you trying to get as much equity as you can into a particular property? Because now these things will actually come into effect in terms of should you actually develop or should you actually buy a property? Well, I don't want to be biased, but now looking from a property investing point of view, I want to cash flow as soon as possible. So now if I'm going to be actually developing land, that will actually take me longer to actually buy that particular property. So now what we actually as property investors like speaking about is that the time is equals to your currency, right? Time is equals to currency.
Yeah.
So the more time you actually take in going into that particular deal or cash flowing, get that particular property to actually cash flow, the more time it's actually going to take you to grow your property portfolio. So now take for instance, right? Looking at a normal property can take up to 3 to 12 months to actually register, right? 12 months being the worst case, like Corona hit, everything just went bad, right?
Yeah.
That could actually take up to 12 months. But now when you're looking at a normal deal, it can actually take up to 3 months to actually get transferred into your name. So now if you're buying this particular property that's already built, that means that from month 1 or the second month that that property is actually registered, you can actually start cash flowing. But now the problem with development is that you need to first rezone. If you need to rezone that particular property or that particular portion of land, you need to firstly rezone that particular property. After rezoning that particular property, you need to get your plans approved by the municipal, which can also take time. After getting that approved, you need to actually get builders to actually build. And now the problem is that people think that with building, I'm just going to build, man. It's like just going to the shop and just getting something to actually come back and build, right? So now there are a lot of hiccups in terms of building that may actually arise, right? Like something like, say for instance, there's a huge rock that's sitting on that particular land and you need to get that rock demolished. That might actually take more time than you had actually anticipated.
I mean, let's also look at the pros from development. You are making your money at the back end. So it will also be up to you. Will you hold that property or will you sell it? However, now it's very important to understand that once I go into development, I know that I'm playing the long game. I know that I'm actually going to start making money once the project is done. However, I want to actually put emphasis when we are saying I'm making money once the project is done. That's if you played your cards right with regards to the research. That's if even when Lebo was talking about making money, that's if you bought the property at the right price. That's if the finances make sense, especially when it comes to cash flowing sense. So it's very important that you do that research before. So with property investing, we always emphasizing that it's the same as playing chess. You need to know the rules of the game. You need to understand the rules of the game when it comes to development. Because now if you do go into development and only understand that you don't have enough money or you don't have enough credit to finish that project. Even with credit, I want to take it further. You need to understand that when you are taking credit, you will be charged X amount of interest. And then you need to forecast whether you're going to sell it or you're going to rent it out, that you're going to sell it at X amount, worst case scenario, including the interest rates that you will be charged from the credit side. And then now your decision will be more informed because you will be considering the practicality of the profit before you even buy the deal. So to even take it further, when it comes to development, you need to actually understand that banks are reluctant. I'm not saying they won't give you money for buying that vacant land. I'm not saying they won't give you money to actually start building your property however that you thought about it. I'm saying that banks are reluctant because they see it buying land and then building, it's more riskier because a lot of things can go wrong. Whereas if you've got the property itself, you as a property investor will run your numbers. You as the property investor will do your due diligence. You can easily make a decision once that is this project going to be cash flowing positive or not? Because even when you're doing your due diligence, let's look at it in terms of due diligence. If I'm doing my due diligence based on a property investing, it's easier because I can easily look at what's happening in the market, look at how much are people renting right now, look at how much will I pay the bank and the interest rate, and then it's quite easy in that way that, you know what, I will be cash flowing positive, so I can easily go into this deal. Whereas with development now, you need to sit back and say, okay, what is going to be the total investment that I'm going to put in this project? So you can't assume that, you know what, just by looking at this vacant land, it's about 1,000 meters squared. I'll probably spend about 300, only to find out 300,000, only to find out that you will be spending about 800,000. And now from the financial side, from the investment side, it's not going to make sense anymore.
Yes, most definitely. So now something that I would actually like to highlight, right, is that a lot of people think that with development, buying land is actually cheaper, right? But now only to find out that that piece of land that you actually bought was way expensive than what you would have actually gotten. So now what do I mean? Take for instance, right, you're looking at a comparison of properties that are actually in around a particular location, right? And now these particular comps run up to 800,000. Right? So now looking at this particular 800,000, you firstly need to consider that how much is it actually going to take you to buy that particular piece of land, right? How much are you going to get from the financing perspective? Thereafter, you need to now start understanding that how much is it actually going to cost for you to build that particular property. So now sometimes it does happen that a particular vacant land would actually cost you around 400,000, right? Then from that particular 400,000, you actually need to start building, only to find out that building that particular property would only cost you around 450 to 500,000, right? So now in that case, you are now sitting at a total investment, just looking at the land and building, right? You are sitting at around 850,000, whereas the comps in that particular area are sitting at 800,000. So now already you are at a back foot because now you need to actually sell. If you are actually intending on selling that particular property, you need to be selling that property at around 900,000 to now break even on that particular property. So now these are the things that you actually need to consider, that if I'm going to be buying this, how do I actually get out of this deal? If you don't have a plan on getting out of that property, then it becomes a problem for you because now you are stuck with this property.
Now you have the lowdown. It's very important. Going back to the theory that we put, this is just the tip of the iceberg when it comes to development and property investing in terms of buying the property and cash flowing it from day one, whether you are looking at renting or you're looking at playing the flip game. So it's very important that you saturate yourself with content that is practical and that will contribute towards the decision making that you're going to do. Last thing you want is that, you know what, I'm just going to buy a piece of land and then I'm going to build on that and see what can I get out of that. You don't want to be in that situation as a property investor. You'd like to gather all the information that's relative to your strategy, especially towards your finances. We did mention that I'm sure you have seen in some areas whereby some projects are halfly built or some projects are only done to half capacity. Then you ask yourself, why is the situation? Then you truly understand the financial implications that are involved when it comes to developing. I'm not saying that the financial implications when you're buying a piece of land, when you're buying a property, and then you're just going to renovate it, it's slightly lower. I'm saying that you need to look at your budget as an individual, look at the strategy that you want, and the practicality of that strategy, then take it forward from there. Because finances do play a big role, especially when it comes to property investing.
Most definitely. And now that's it for today. On the 1st of May, we will actually be in Pretoria East at the Waterkloof Golf Club. Thereafter, we will actually be hosting another property workshop on the 5th of June 2021, right? So we will actually be hosting it at the Precinct Luxury Apartments. So now if you haven't actually RSVP'd, make sure that you RSVP now, because if you are a property investor and you are actually looking for information that will actually give you a better chance at investing properly, make sure that you do RSVP as soon as possible.
I mean, you need to be there, especially if you are an investor, you bought a property, you're not understanding what's happening to the cash flow, or you want to buy land and then you're not sure that should I buy land or not buy land. These are the discussions that we will be having, like real topics about property investing. The practicality, I love saying practicality because at the end of the day, it's about us giving you content that you can not only relate, but you can also apply in your journey and get your desired goals. Subscribe. If you haven't subscribed, please do subscribe.
Cheers. Noel.
Signing out.